In this video, I want to answer the question, was 2022 a real bear market? In this screen, you will see the NASDAQ futures daily on the left and the S&P futures weekly on the right, two different time frames, some different perspective, and I want to focus here on the NASDAQ. So the technical definition of a bear market is when it is 20% off the highs, and so for sure the technical definition of a bear market has been met on a daily chart. And from all-time highs, you see a little bit of the history. In 2019, the market burst back to 2018. The Fed was going to normalize interest rates. Then it pivoted and the market rallied in 2019. It was due for a correction. We had the pandemic at the beginning of 2020. Fed stimulus came in and the market just soared to all-time highs. One of the biggest gains in, it's pretty much doubled off the lows on an index value. For the NASDAQ futures, if you take a look at this, and then you see this pullback. So this pullback, we are still at higher levels than the peak right here before the pandemic. We're higher than the pre-pandemic peak, so not a lot of pain from an index level. Yeah, it's nice to continue to have it going straight up in your favor, but overall, there is a gain since the pre-pandemic highs. It's higher than that. The index level is higher than that. So while it meets the technical definition of a bear market, I don't call this in my analysis a bear market. I call this a readjustment period. And I want to show you some intraday trading systems. So for example, during this time frame, you see the market pulling back. But let's look at some intraday charts, and then we'll come back to this daily chart as well. We focus on algorithmic trading. This is a trading system, and I want to show you the results for this trading system. This is a short-only strategy. So it takes short-only trades in the S&P futures, and you can see how going back to 2007, it's had an upward sloping equity curve. It peaked here and right around the beginning of the pandemic, and right there the Fed stimulus came in. March of 2020 it peaked. And then obviously it would be difficult to short this market in that Fed stimulus time frame. But in 2022, you would have thought that the gains would have been better for this strategy. A short-only strategy in 2022 should have come to new equity peaks. It was profitable, 31.6750. The AT 2021, no range filter, turn the range filter off, and you see the results for this strategy. But just a sideways equity curve since the Fed stimulus, but you would have thought that after Fed stimulus there would be an equity peak on a short-only strategy. Also, let's look at long-only strategies, or long strategies, the long version strategy. Here's the strategy, EVP1. What did it do in 2022, testing back? This is going back to November of 2021. Nice upward sloping equity curve in the NASDAQ futures, taking long-only trades. Really one of the years of bigger gains on the long-only side with the bear market rallies for sure. And then over here on the Viper strategy, it takes long and short trades. One of the best years it's had with these parameters, but want to take a look at the difference between the longs and the shorts. Most of the gains are on the long side. And so on a day trade perspective, the long side was still better than the short side in 2022 in what is considered a bear market. Very unusual dynamic. And so what I see, while this meets the technical definition of a bear market being off its all-time highs, intraday, the intraday structure, the microstructure of the market didn't trade like a bear market. We didn't see a lot of capitulation. We didn't see margin calls. We didn't see panic selling. It was a very controlled sell-off. And so I call this a readjustment period instead of a bear market. And so we're seeing a readjustment period. And from here, we're at kind of an inflection point. Depends a lot on Fed policy, enough liquidity to kind of prop this market up. It's been propped up for about 6 months now. This is the June 16th lows. There's an FOMC meeting. Market perceived the FOMC meeting as dovish and that it will pivot. It never did, and the market is still pretty close to these lows 6 months later. So massive propping up in the NASDAQ futures, and it's even higher in the S&P futures. And so we have this readjustment period. we could see a real bear market though, because we didn't really see one. We saw this. We were ready for an adjustment. We had panic selling in the pandemic and then massive Fed stimulus. We never really had a real bear market. We haven't had one in a long time. All these V reversals keep popping back with Fed stimulus. And now that Fed stimulus is not there, the time is right for the dynamic of a real bear market, something that sells off intraday more than what we saw in 2022 and prior to the 2009 QE time period. Markets would sell off and they would hit lows and trade down and trade lower during the day instead of this constant bouncing back and propping up. And so we could see this bear market. We could also, depending on what the Fed does, we could see a return to highs if the Fed does decide to pivot, even though they say they aren't. And so that is the biggest question. So that is my assessment of 2022 bear market by definition. Trading dynamics, not so much of a bear market, but a readjustment period. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.